All right, we're live for another show here, and it is July 30th. So go to Rolland Market Mashup on YouTube and subscribe. Bob, we're glad to have you back. Vaz made a good fill-in yesterday, but always not quite the same when we don't have you on here. So happy to have you back. And
a lot of people hitting me up about Kodak. It was funny. I had a couple of friends being like, "Oh man, I should have jumped on Bob's advice there."
Well, I don't think I ever said just buy it, but I don't know. I'd have to listen back to what we were saying exactly.
I think you have a lot more people engaged now after that Kodak talk.
Well, the Kodak is even more interesting. I just read an article in the Journal. The news was kind of leaked out on Monday, and a couple of local Rochester, New York newspaper media outlets got it. And apparently there's this thing called data miner that a lot of hedge funds subscribe to. And data miner goes through all the tweets that are out there and deciphers if it's going to affect stocks or not. And they were able to pick up that Kodak was having a major announcement, at least reading between the lines. That's what it says. So if you were able to buy this thing Monday, you were paying up 25% from like 2 or 2.25 and get in way before this move. So I have a feeling there was a lot of hedge fund activity on Monday.
There was. They've been talking about TV, talking about how there's been illegal activity.
It seems to me this is a low enough capitalization stock, not a lot of shares outstanding, that the supply and demand is just way out of whack. And because of Robinhood and all the new day traders out there, there's just too much demand and not enough supply going on here. Even those who want to short it, you can't find enough stock to do it. So you're not able to get hold of shares, and that's why this thing is just through the roof. And it's up again today. I think it hit 45 this morning.
Wow, was not on that bandwagon.
So what's your take on where it goes from here? Because I know you were saying yesterday, along with many other people, that this is nothing like you've ever seen before. And
yeah, I mean, look, I would just say, just short this thing, sit back, go on vacation, come back and cover your short at about $8-9. But it's too dangerous. You just don't know how far they could take something that has a supply problem. In a way, think of it like there's no masks in the United States a couple of months ago, and people would pay anything for a mask. What's a mask worth? 30 cents? And people were paying $10, $15, $20 for a mask.
It's like someone in our space, think about people wanting food delivery and there being no one to deliver it. What are they willing to pay to get that delivery when there's not many drivers? It's like,
right. And if I was Kodak, I would offer as many shares right now as a secondary to raise money here. Even if they raise the money. Just come out with a secondary. They'd be crazy not to.
That's what Lodell's doing.
And Dad, what you're seeing in Kodak does kind of make you not necessarily hesitant, but does it kind of almost complement the theme that's been happening in the overall market, just with some of these other stocks where when they catch fire, they run in ways that are just not even rational?
Yeah, I think it absolutely tells the story of what's going on with the Robinhood effect, that people are chasing shares and there's a short-term supply problem. There's just not enough shares for the amount of people that are trying to buy these things.
That's the on-demand economy for you.
So basically, I mean, what you can take from this is if you could find companies that have very few shares outstanding, and then there's a story behind it, the run on these things could be much more dramatic than, a stock like, take any major company that has hundreds of millions of shares outstanding.
What's the best tool for everyone to see that, like at scale for stocks with outstanding shares?
You could find that in Yahoo Finance.
Like a huge snapshot where they show you.
Yeah, I mean, Yahoo Finance is free, and you could go in there, and under statistics, it'll show you how many shares are outstanding for a stock.
Interesting. So let's shift gears here a little bit, because I know everyone's been kind of circling yesterday and today as two really big market mover days. Yesterday, you had the Fed as well as the Congress testifying the big cap names, which I think was more fluff than anything. We've seen that a bunch over the last couple of years. And the Fed, I don't think it comes as any shock that they said that they have no intentions of changing anything. If anything, reading between the lines, they imply that there's a lot more in their toolbox that they're willing to do if needed. They kind of didn't shoo away from the notion of possibly buying stocks, even though he sort of deflected it in a way where he kind of implied that if they really needed to, they could buy ETFs, mutual funds, things like that. So I thought that was interesting. The market obviously went higher after that Fed meeting, which was crazy to me because, again, no one thought that they were going to raise rates or even suggest that they might raise rates. And if anything, he kind of said that the economy is not doing well right now, and said that it started to rebound and it quickly hit a wall, and now that they're not really seeing the consumer confidence that they want to be seeing. So I thought it was interesting that the market digested that in a way where it was like, oh, let's just rip higher. And curious to hear your thoughts on that. And then obviously we have all these earnings that have been coming out, and the really big ones are going to come out at close. Google, Facebook, Apple, Amazon, all to report earnings today at close. I think it's one of the most important earning days, really, that I can remember in my short investing history, just because you have so many big companies that have moved on so much speculation, all reporting at the same time. So what are you looking for? Do you think the market's going to move as much as people think on a day like today?
You know, you just had GDP come out, and just to show how weak the economy is, you know, it's a horrible number, but it's better than, it looks like it was better than what they were thinking it was going to be. So that's probably a neutral, but that explains why the Fed is saying what they're saying, and the market wanted reassurance that the Fed is not hesitating about what they have said earlier. You know, I think people were surprised at how bad Germany's GDP was today, which I don't know why. I mean, everybody's GDP right now is not going to be good. As far as the earnings go, who knows? You know, you think that a lot of it is in these stocks, and all those companies should have great numbers, but it's what they say, not so much what they've had as numbers. But, you know, having said that, a lot of them play a conservative anyway when they bring out their numbers, and they kind of, everyone expects them not to give an outlook that's too exciting. So I don't know how the market's going to react.
So, I mean, what do you think people are looking for when, for example, Apple reports the earnings? I know most investors that are in Apple will sit there and wait for the headlines to come, whether or not the stock's up or down, without necessarily knowing why. But the big money that's going to move the stock one way or another, and I know this is just an opinion, but what are the little things within the reports that they want to see Apple say, that they want to see Amazon say? Is it, you know,
Apple is going to be wearable driven. That's going to be a big part of this one, I think.
Yeah, and I think Apple, it's, you know, how quickly the service part of their business is growing.
When the 5G talk is going to be, I'm sure, brought up a lot on that call, getting investors, you know, wetting their beak a little about where that's heading, which is clearly an advantage for Apple.
Yeah, and I think they'll talk a little bit about where 5G is with their phones, and I don't know. I don't know what it's going to take to move that stock higher.
I'm personally not thinking it's going to be a non-event, in my opinion, with these big tech earnings. That's how I'm thinking.
I kind of agree. Like, there's been too much talk about how this is such an important day with earnings.
I don't see it
from here. at the end of the day, Amazon, these companies are gonna say what people expect them to say.
And Amazon's off its highs. Let's be real. It pulled back a bit. If anything, that could be set up for it breaking through again. Because when you look at Amazon the last few weeks, it's not like it's just been on a tear the way it was.
Right. Well, I think that's the case with a lot of these companies.
That's why I think this is kind of a non-event. It would be one thing if tech never sold off the way it did the last couple of weeks. But, it lost a little steam. I think that was healthy for the market. And I'm more looking at like I saw the Wingstop earnings were absolutely phenomenal. You look at a company like that, they're a major winner from the pandemic because 80% of their business before the pandemic was delivery and takeout. They opened 23 new locations or are opening. So they're on a trajectory up. If you bring up their ticker, Wing, they're already at all-time highs. I think their chart, though, is looking to break out more. I didn't see any and we're in the delivery business. We've seen that demand. They're a great company to combat that. When you really think about a huge winner here in food, it's Wingstop. We knew their model going into this was ripe for this exact thing happening.
Did they talk about the price of wings? Because I thought that was always an issue with these companies lately.
I don't see that. My whole take on the price of wings, when you say for what, the consumer being kind of hesitant to buy if it's too expensive, I don't look at
their actual wholesale price of buying wings.
I look at that. That didn't seem like an issue because that's just, you increase the menu prices. People want wings. So it's not, I don't think that matters personally. We've seen that over the years.
I still think we should open up a thigh shop.
But guys, another one like Keurig Dr. Pepper is reporting today, I think right before the bell. When you look at KDP, that's another interesting play. You think of all these people with soft drinks, coffee. I know offices have been closed, but people haven't stopped drinking Keurig. They all have them at their homes. So these types of stocks to me are more intriguing than the big tech companies around earnings. I think these are bigger events personally.
Yeah,
less people are watching them, so you get a bigger move off the earnings if there's a surprise.
Just in terms of a couple possible big winners here, Wingstop and Keurig Dr. Pepper, I think are both interesting plays to hold right now.
Yeah, when you talk about Wingstop and you look at their chart, how do you kind of look at a chart when stocks get into their all-time high range and they're kind of in this new uncharted territory where they haven't really gotten their new levels of resistance? How do you kind of, as an
off of new, and keep in mind, Dan, with that off of new like news off of really great earnings and kind of a new era for Wingstop. Like you have to kind of look at this as post-pandemic compared to where they were 6 months ago.
Yeah, and I get all that. I'm more just talking about from a technical charting point of view. Dad's always great at identifying levels of support, levels of resistance, and I know when you're looking at breakthroughs, the levels of resistance become new levels of support. But what about the levels of resistance?
Look, for me, it's very difficult to buy companies that are making all-time highs. That's a momentum play, and that's momentum investing. It's different. If you're starting a position with it, take 10 or 15% of what your total position is going to be. But then I would wait for a pullback to like 146.5 to start, or 145. And, if you don't buy anymore and you only got a 10 or 15% position, it's not the end of the world, There's
no wrong with Wingstop. If you want to own this stock, it's not going anywhere but up long term. I look at this kind of like Domino's. I know they're not as big of a brand, but it's such a consumer staple in food. We know wings is one of the most popular foods for pickup and delivery. That's not going anywhere but more commonplace. We're going to see in the fall and winter, people are going to be very hesitant to dine out. Wingstop was never a dine-in model anyway. That's why I've always been a huge Dunkin' Donuts fan, because that's not big on dine-in either. I'm a huge fan.
Nice, yeah. And let's also bring up Penn here, because I know we talk about them a lot. And yesterday, they really just broke out.
You love Penn.
Well, I mean, yesterday was such an amazing day for Penn. And yeah, anytime they have days like that, I'm going to bring them up on here because we talk about them a lot. I own them a lot. And I sold a little yesterday. I still own a lot because, I mean, how could I not love Penn? Yesterday, they were up over 15% at one point.
Yeah.
And closed the day really, really strong. I mean, this company is, I think, basically at all-time highs, which kind of not necessarily like they're not at all-time highs right now, but I think they've managed to close at all-time highs. And
I think the regional thing we talked about is big for them. That whole unknown with, people not traveling nationwide right now, they're keeping in close proximity with road trips. That's a huge win for Penn.
And Dad also said yesterday how Boyd Gaming came out and said that everything going on there is way better than expected. So obviously the casino stocks are going to act really well when that happens. But
Uncle Al in Vegas, he said he was worried. He says it seems fine.
Interesting. Yeah. But yeah, it's just crazy. Penn is such a winner right now. And they're acting in a way like something is going on behind closed scenes because the amount that they've been up, it's remarkable.
Pent up demand. You've got a lot of people. Keep in mind, sports are coming back, even though there was that blip on the radar with baseball with the Marlins. You've got basketball starting up again. Hockey playoffs are this weekend. So there's a lot of demand for action, and it's coming back one way or another.
I think there's a rumor out there that Dave Portnoy is going to be the Biden's vice presidential pick.
That would be something.
If you look at Steve Wynn, WYNN, it had a quiet, very nice day yesterday, and it's up $3 pre-market. And I think there's some more good news out of Macau. The China-Macau border, Guangdong is allowing all their residents now to come in without a 14-day quarantine.
China.
So it shows you how sensitive these stocks are to whatever announcement comes out of Macau. And then I think there's people in general that are just playing the casino group, and that affects Penn and Donkey Kong also.
Yeah, Wynn to me is such a great long-term name that I don't know why I don't own it at the moment, but I look at this.
You own it so much of the other gaming.
That's yeah, I own a lot of Penn, and I'm happy with Penn. I kind of look at them as two completely different categories.
Yeah, but don't you also own Take-Two?
Well, yeah, Take-Two is a video game company. Wynn is a game company. Yeah, but no, I'm just saying in terms of, and you're right, I own a lot of DraftKings, I own a lot of Penn, but I look at Wynn almost in a separate category more so with the MGM type stocks. But Wynn, it's tough to look at this chart and not think at some point the stock is above 150 again, just when life is completely back to normal. I almost know they're going to be. I don't know how long it's going to take. I mean, there will be a day in my life where the stock's probably over 250, probably within the next 10 years.
Well, that's the key thing, though, is how long is it going to be? And that's where you go back to like a Boeing. It's the same thing. Sure, that thing should be trading double of where it is, but when? You know?
No, it is a waiting game for some of these companies.
Yeah, Boeing is. I'm trying to figure out when to get back in the stock. I'm glad I sold it over 180 because it's just.
I think they're giving you a chance right now. They had earnings yesterday, and the CEO was on, and it's obvious, you know, things can't really get much worse for Boeing. So their earnings were pretty bad, and they've lost a lot of money. And I think
what can they get them better going on a run here in the short term for anyone wanting to get in this stock right now?
Well, you know, planes are getting older, no matter what happens with the pandemic, and people are going to fly at some point. So at some point, they're going to get orders no matter what. The 737 will come back. They are getting defense contracts. It's just how far out is everything?
This is another stock where if you're looking long term, again, it's tough to not imagine the stock getting back to where it was, where, you know, it was in.
Well, it's a defense
it'll take a long time to get back to where it was, but.
Yeah, but it's all, keep in mind, this isn't just planes. It's we're in bed with the U.S. government. Boeing is a defense company.
And I'm not talking at all about like swing trades on a stock like Boeing or Wynn as much as
long-term anchor.
Yeah, like those. I just think those are interesting levels where you're looking at, you know, if you're looking at your portfolio and you're looking at 15, 20, 30 years where stocks are going to be, stocks aren't going anywhere. at least not in my opinion. Also, guys, Badge just reminded me basketball starts tonight.
Exactly.
Yeah, and having said that, I was thinking, and I heard some guy mention it, with sports starting up again, you really now have to think about maybe getting out of the video games, because they're not going to have 100% of that market anymore.
I don't agree with that.
Sports is going to be.
I think you're off on that one.
Well, it's a thought, though, right? Because
what do you mean? I don't understand what you mean by that.
There'll be less people playing video games because they're watching sports.
And Mike,
they're not stopping. Gamers don't stop gaming because of watching sports.
Whether or not it's true or not, if it's an idea that's put in investors' mind that video game stocks are going to die off a little because real sports are coming back, you just might see some sort of rotation. I agree with you.
That would be incredible. I'll dump the kitchen sink at Activision. I don't see gamers are not sports watchers. Let's keep that.
Yeah, but what you've gotten in the last 3 months are people that are sports watchers switching over to gaming and also day trading.
Big time.
Dad, I can tell you right now, anyone that is gaming is not stopping gaming. Just because.
Let me kind of put this in perspective. Some guy that's watching Big Cat from Barstool play a video game at night because he can't watch real sports. You would think that person would much rather prefer to watch LeBron James dunking all over the place than watching Big Cat play a video game of a football team. I don't even think you can argue that. I agree with you.
I don't see how that's relevant for like an Activision though. I'm talking about like when you're looking at gamers, the video game, a stock like that, or even a Nintendo. I don't see sports coming back hurting them at all. You have people in front of your televisions. You can't even go to games this year. So you have people I'll tell you firsthand, watching games over the years, it triggers me wanting to play a video game even more. And you're in your living room. It's not like people are going to these games. So I don't see those things. I don't think that impacts video games negatively whatsoever.
The only thing it does is it takes away 3 hours of play that they might do because they're watching a basketball game. That's all.
That seems very far-fetched.
It's an interesting point, though. I
don't see how they correlate. I don't think it's the same audience.
I would argue that Netflix viewers will go down because more people are going to be watching.
That's different. That's a much different.
It's the same concept, though.
I don't think so.
It totally is. I got to bring up Waiter here because I've been following this stock pretty closely lately, and
Waiter.
I know I brought it up a couple of days ago, saying $5 was like kind of a key level that it was having a tough time breaking through. And then yesterday it broke through and closed over $5. So it's going to be interesting to see where this stock goes from here. I know they're coming out with their earnings soon, and I know being in the space and based on what they even came out and said about a month ago, this company is doing pretty well right now. So, when you
maybe they can afford to buy us if they keep going up.
Well, look, when you look at everything happening in the space, you look at the acquisitions that have been happening. If Waiter is doing decent as a company, not only are they a sexy acquisition takeout target, but there's no reason their stock's not going to go up off of either them having good earnings or people just assuming that they are going to get acquired.
It's also great news for us as we're expanding.
This is an example of a company that could take hold in Robinhood. I mean, if you look at the chart on Waiter,
it's obvious Waiter is getting acquired. It's about when.
This stock has resistance at 6 and then 10. So I think that,
I will be shocked if this company exists in a year. I don't see it.
It doesn't even matter if they exist or not, if we're talking about the stock action.
Yeah. Well, no, it's a great play because they're going to get acquired.
But they could get acquired for $4. Getting acquired doesn't necessarily
mean the sentiment around the space. That's why this thing's going up too. On top of the demand with delivery, the consolidation. So naturally, there's this notion of that.
They also did come out like a month and a half ago and say how they're doing really well and they're growing and they're profiting and all the things that caused their stock to go from a $10 stock down to a $2 stock to begin with. it seems like they're starting to figure it out. I know
we've seen guys firsthand. This pandemic is the demographic shift. It's more expansive with delivery. There's way more people now open to ordering in.
So look, it's an interesting name. Yesterday I'm still eyeing. I'm keeping in mind the conversation that we had last week, or it might have been the beginning of this week, when we were talking about different names that are getting close to entry levels if the market does continue to slide. So I thought yesterday was interesting because Netflix, even though the market was up, trying to pull it up here.
Netflix.
Yeah, that's still been okay.
NFL. I think it's. There
we go. Yeah, this stock's been still sliding, and I'm getting close to wanting to pick some up. I don't own any. I just think, kind of going back to what you
slide more.
Well, what you were saying at the beginning when you were talking about Wingstop and how that could be a good company to go hard on to take you into the future here. I go back to, if the market's going to really get back into rally mode, which lately it's been a lot of chop, I think the big cap tech names are going to be the ones that ultimately get us there. And I don't know if I'm right in saying that, but you look at it almost seems like the market's been stalling out, waiting for companies like Google, Amazon, Facebook to report and show like, hey, things are fine. You had Microsoft, they came out with really good earnings. Netflix came out with really good earnings, but all these companies are trying to tamper expectations because their stocks have run up so hot that if you're Netflix and your stocks run up this high, you're probably thinking to yourself, this is the quarter that we could afford a big sell-off. Let's keep everyone in check here, even though we know we're doing great.
Yeah. And personally, I look at Netflix and the background of sports coming back, and what I'm doing myself is I'm looking for other places to find content because I'm kind of bored with what's in Netflix after 3-4 months. And the stuff that is coming out is more international, which is fine for some people. But I think the stock could get down to easily 450 and possibly 400 before I would start.
Yeah, Netflix definitely has a content problem. I'll tell you firsthand from being like on these platforms, Amazon is kicking their ass with content lately. They are really just leveling up quality content.
Not only that, you got, so we talked about sports coming back. There's other things that people are looking at. They're looking at Acorn. They're looking at Hulu. They're looking at Apple. These are all other places to find content now.
What is that? What, Acorn, the investing app?
No, Acorn is actually like a Netflix. You get it on Roku, and you're able to see British and Australian shows. And there's some
Roku seems to be the intrigue there with the connector out of all these. They are, guys, I've loved that. I don't own them currently, but I've liked Roku for a long time. I think they have a very unique model. I know there were early fears of competition from Amazon, but when you think about all these streaming services, these guys are the winner from that.
Yeah, Roku's chart is a lot better than Netflix.
Yeah,
right now.
I would look at Roku before. I've been thinking about buying this. I don't own Netflix either. I'd rather be jumping on these guys.
So what level at Roku are you guys, Dad, where would you look to pick up a dip here?
I actually think right around 150, which is right where it's trading, is a good level.
I like it.
So where do you guys see the stock? Like, where do you think it could break out to?
Oh, man, over 200. I think Roku, it's set up for all of, like, where we're heading. I don't think there's any, like, they're in the driver's seat.
The year high on Roku is 176.5, so that would be the first place you'd probably try to get through.
If you notice with Roku, there were like a year or two ago, there was all this sentiment around possible competition worries, and that's just been not even talked about anymore because they have no chance of being competed with anymore. If Amazon wanted to, they tried to, it didn't work. If anything, they'd just buy them, which they're not going to, but this is a great stock.
So final minute here. Are there any stocks you guys are selling or buying today? Mike, starting with you.
I'm looking at Wingstop. I'm also looking at this. I'm keeping an eye on Keurig Dr. Pepper. I've never owned it. I think that's an interesting play with these times to look at as a hold. So I'm keeping my eye on those.
Bob.
No, I mean, we talked about the stocks that, I'm watching. I don't think I would do anything in the names that have the earnings today. I would wait until after the earnings and decide on those. But right now, I'm staying low. I'm driving up to the mountains today.
Nice. Dan, what are you liking?
I mean, I'm going to be watching this APT stock again. I know it's a stock that I've been big on. Yesterday, midday, it had a huge volume spike where it broke out to 25.50 on news that the new stimulus package was going to include part of it where they were going to make a match for all Americans. And then at the way end of the day, there was a big seller and it gave up all its gains in the last 10 minutes. It was gut-wrenching to watch because I thought it was going to be the complete opposite. So I'd love to see this stock break through 25 again. And I think it's starting to gain a little traction on the internet. I think we started talking about this name a little early, and it's not in the retailer investor's mind. And I think today is going to be an interesting day for it. It's either going to fold like a tent or it's going to get back in the rally mode. And for my sake, I'm hoping it's the rally mode. So APT, they make masks and they make protective gear.
And short for apartments, abbreviated.
Yeah.